2 tax lessons you can learn from a stripper. Let's watch.
In 2024, I officially did an S-corporation election for my LLC, which basically means I pay myself a reasonable salary and the government withholds taxes from that like they do with anyone else's normal paychecks and normal salary. And then on top of that, I have to pay additional taxes. So my reasonable salary that I pay myself is $200,000 a year. And from that $200,000, the government already withheld $80,380.22. So that was already withheld from my $200,000 salary in 2024 for federal income tax, Social Security, and Medicare. And then on top of that, my CPA determined that another $64,363 was owed because obviously outside of the $200,000 salary, I still had about $361,000 worth of income that I reported. So an additional $64,363 was owed on top of the $80,000.
Okay, so there were some good things here and some bad things, and some things that weren't discussed. Thing number one that was good is the S-corp election. That is a way to effectively eliminate a lot of your FICA taxes, Medicaid, Social Security. 15.3% if you're self-employed comes off of every dollar before you even pay your own income taxes. Okay, that's your W-2 income. So her electing the S-corp and taking a salary was a good job. The bad thing that she did was taking too high of a salary, in my opinion. I don't know that most strippers make $700K a year, which is crazy, but I would lower that number significantly, probably to like about 100,000 is what I would probably recommend, because it doesn't matter what your total income is. It just depends on what you would pay somebody to do that job if you were like the boss. Okay, so 100K is good. Even if she did that, that's going to save her another 15K in taxes by lowering her salary from 200K to 100K. The other bad thing that she did, in my opinion, is, I don't know if she talked to her CPA, she didn't talk to anybody about other tax strategies, but at making $700,000 a year, I would probably create a plan where I bought one piece of short-term rental real estate a year, like an Airbnb. I would put it into practice. I would rent it out. I would make sure that I was able to achieve the tax status that allowed you to use the depreciation that you can derive from that house against your active income, and you could wipe out almost that entire tax obligation. Probably a significant chunk of it you could. So that's what I would do if I were her. Otherwise, congrats though, and that's it.